Hey, Richard. Thanks for taking some time to. So today I wanted to talk. Let's talk about multi-strats one more time. I think this will be our last one. So one thing that I've been reading about a lot in the news recently, and one thing that honestly I talk to a lot of people who um, don't really have a good answer to. Where do you think all the craze, if you will, for multi-strats is headed? What's the end game for the fervor, for the trend, for the dominance and mind share of multi-strategy hedge funds right now?
Yeah, I mean, there's clearly an element of it's in the news and therefore it's newsworthy sort of thing
Well,
about
of
it.
course.
But as we said in well, the first of our videos, where multi-strats have the big advantage is when there is no clear thing going on, when there's a lot of noise and dispersion, and uh, because the well-run ones, I should say, let's be really clear here, have such good inbuilt risk management around how they take risk. Um, they can they can create a return stream that's interesting for investors from lots of tiny little bets without ever having to have a very high proportion of right. So they can be 51% right on a whole bunch of uncorrelated bets, and it works very well. So while markets are uncertain and other people struggle, particularly when hedge funds compare themselves to just the S&P or something like that, multi-strats have a huge advantage. When the market is, I mean, easier, whatever that means, the multi-strats clearly at a single strategy level will not perform as well as the concentrated risk takers who get it right. But at the moment, that's a very, very small proportion of people, the concentrated risk takers who get it right. So there is an element of it's the time and they're making hay while the sun shines, and that's how it should be. Things
So do
may
you think
change on that front.
relative performance then? So the thing that sort of sets the sun a little bit um, is when other types of funds are doing much better because the opportunity set, and again, if we say, it's defined by the S&P, um, if you have 3 years where the S&P's up 15-20% every year running, what you're saying is that's probably bad for multi-strats vis-a-vis other types of funds that might be long biased in some way.
Yes, or when there's a very, uh, if you think of a quantitative easing type scenario where there's a clear bias towards growth or clear
Sure.
bias towards bond yields or something of that order that makes it easier for other guys to make money. I think that's one side of it, right? It's a good time for multi-strats because it's quite a hard time for other people.
That's
That's
so I guess that's true, right? So it's in a market that's less trending and where there are
yeah.
have been fewer trends, whether you look at commodities or rates or equities, if there have been fewer sustained long-term trends, then people who are making bet it all on black bets on the things that drive those trends um, aren't doing so well. And multi-strats, eking out tiny edge and then combining them all together in a sophisticated risk product is the best game in town. But
I
not
think I mean that's the truth of the matter. Um, I think there's another side to this coin, and at the risk of going on too long, the other side of the coin is that there are going to be, for sure, things which sell themselves as multi-strats, but have not managed to put in place the processes to do it correctly. And at some point, it's reminiscent, and I don't mean to put these two things in the same box. It's reminiscent of the sort of the crypto type thing. At some point, people will invest in these things which purport to be extremely well-run multi-strat, which have flash presentations, but actually under the surface are not doing it properly, and they will blow up, and that will tar the whole game to some extent. And then the question of is like, where does the knowledge come from, the expertise come from to truly assess what's going on under the covers? How much information are you given as a allocator to really know what's going on in these funds, and some of them are clearly very transparent, and the ones you'd expect, the ones that are very well run, to be transparent. But that is, I mean, that is always the way in finance, right? It's gathering momentum. People are going to jump on the train. They're not going to do it properly. There's going to be some corners are going to be cut, and something is going to go wrong.
So once the corner cutting multi-strats start blowing up, it's going to be a black eye for the whole sector, and maybe that could be another catalyst for slowing down at least that momentum.
Yeah, I think so. And we know this, whether you're running a multi-strat or you're allocating to multi-strat, you have to be a much more sophisticated financial engineer, or financial reverse engineer, or certainly you have to have an understanding of risk at a much deeper level than if you are long only benchmark and are very tightly within a bound that is very easy to understand, I should say. And I think that's going to create fractures in the way these things operate.
No, I think those are good points. So I think that's a couple of different tracks. So a couple of different ways things could start to slip off the wheels. Well, anyway, Richard, thanks for taking the time to talk multi-strats today. And let's talk again soon.
All right. Thanks very much, Stephen.